see. Are we live today? Hold on. Here we are. All right, what's up, everybody? It is Tuesday. It is 6:30. My name is Scott Redler, Chief Strategic Officer of T3Live.com. This is the 630 Club. This is where we go over levels. This is where we go over what the keys to the market are for the day, maybe for the week, maybe even bigger picture. At this point, we all know we're getting into earnings season. We had three little things that have happened over the course of the past 2 weeks that gave people a little bit more of an active bullish stance. One, semis were bought when Micron had an underwhelming report, so those dips have been viable. Two, Thursday CPI was hotter than expected, but the down open was bought. And then Citigroup engulfed all those banks, and now here we are heading into Netflix. Let me say hello to some of my dogs around the world. Let's see. Who do we got? You guys can take a look at the chart of the SPYs after this disclosure while I say hello to some of my friends who are tuning in, trying to get the day going. We got Pennsylvania in the house. We got Long Island. I grew up in Long Island, by the way. Sass and my friends. What up, Atlanta? What up, Hits? Always like the sun coming up every day, even if it's raining. What up, Uruguay? What up, Morning? What up, North Dakota? How you feeling? So yesterday we went right into resistance and got rejected and tested an area that I think a lot of people wanted to buy. They just didn't want to buy it at 350. And now here we are almost engulfing yesterday, making some misdirection. I'm sure it's peeing off a lot of people, including me. So I'm trying to let it roll off a little bit. What up, Ohio? What up, South Bend? What up, Georgia? Good to see you. What's up, Atlanta? Who else we got? We got a little Van Halen in the house. You guys remember Van Halen? This is like old school 80s. I graduated high school in 1991. This is, I think, 1986-ish. What up, Brooklyn? What up, Toronto? See the forehead's getting a little bigger? At least I got some hair left, right? A lot of people have been pulling their hair out lately, right? You have everyone with opinions. We're going to go back to the lows. Earnings season's going to be horrible. We're not at peak inflation. We're at peak inflation. We're not at peak inflation. Meanwhile, the market typically shows the way. And at this point, again, there's been some small little clues that perhaps this active sequence off the low can continue, but it's not the easiest to stay with. And it is July 19th. So if you are a little frustrated and you're not really, and you're a little off, go for a swim in the ocean. Just watch out for sharks. Did you see all the news? There's sharks everywhere. What's going on? There's predatory computers in the market, and there's sharks in all these oceans. What's happening? Let's go back to 1993. I like 1993. 1993, I was in SUNY Albany. I was emceeing bar mitzvahs, going home on weekends. This way, I could pay for school. What was that? And I was also president of my fraternity, Sigma Nu. Yes, playing flag football. I was benching like 3 plates. And I was having a lot of fun. We used to walk around with pitchers in the bars. And we all had our own pitcher of beer. And imagine now you're sharing beer, like pitchers of beer walking around, you'd be like a meathead. Anyway, with that being said, let's take a look at the SPYs right now. Here you are. Remember yesterday we were here? And I'm like, we had a big gap up. And I was like, if you went long from the Red Dog reversal last Thursday on that hot CPI, you were feeling good coming in yesterday. And if you use day count rules, day 1 you usually buy, day 2 you could add, day 3 you're always trimming. So if you trimmed into some strength into this little trend line here, right? You had 393, 390, 389. You weren't so upset when the market retraced on that Apple news midday. And if you did that, you could have actually, if you sold into some strength, you said, hey, look at this. This is Thursday's gap. This is 380.54. Maybe you bought some back. That's how you manage your size with the tier system. So anyway, that's if you did it really well. For me, I was trying to fade a little bit into that move, and I actually just didn't stay with it. I was shorting Apple a little bit in the morning because I saw some relative weakness, and I'm like, Apple's a little overbought. And P.S., when he came back from lunch, Apple was down $2.50. So that set me off. You ever get set off? You ever like I was trying to catch that, and all I had to do is put my stop and give it some room, and I would have got paid. Well, that was me yesterday. So you want to hear even how more frustrated it is. So now, we come in, we test this area. I start buying a little bit early, okay, it's like 382s, and it goes all the way to 380. So I'm like, you know what? Let me wait till tomorrow. And then in the last 7 minutes of the day, they rally the SPYs, the Qs, and everything. I'm like, you know what? Let me fade a little bit. Even though I want to be long, because I do think at some point we take out this descending trend line and we head maybe up towards this area. So PS, here we are with the SPYs up 28 handles. Basically bouncing back, almost negating this whole part. So here's the thing: if you're a little short overnight, I'm a little short overnight. I would say give the SPYs to this 386-ish. If it starts taking out 386-ish, this candle means absolutely nothing. All they're going to do is frustrate anybody that got stopped out yesterday of some longs and maybe got short, and then all of a sudden now you have a lot of people trapped for what could be a better move above there. And the Qs look the same. The Qs actually have relative strength. The Qs yesterday also, remember we talked about 297 being big resistance going across. Well, from the 280.05 red dog reversal, and a lot of people made a lot of money because what happened? On that Friday, when a tiny bit below, Thursday, when a little bit below 280 reclaimed it, that's a textbook red dog reversal, and it held this small little trend line. So into this resistance made sense. So now what? Okay, I guess see if some sellers try and sell a little bit of this open, and if they can't, just don't get frustrated. Don't start rolling up shorts, just because you got a little short yesterday. And then figure out what could be next, because you don't want to miss another move if all of a sudden, this starts to get cleared, and you start to see a better reflex rally. But I'm not saying it's going to happen. Am I still in blue? I got stopped out of blue yesterday. It happens. I was really trying to play blue for a breakout move above this level here. It didn't happen. Now I'm going to revisit it. So this was a spot. I thought maybe you can get above 546. I'm not, I don't have a base case for blue. I just thought this stock was $150 about a year and a half ago. If you look here on the weekly chart, a year ago or so, this was, this is where blue was. This was like 150, and this was actually even 250. So I thought down here, I'm not going to get into the whole thing, but basically, no. I could have given it more room, and I'll revisit it. But ultimately, in the last 2 days, 3 days, we've had a decent market move, and this has been rolling over. So unless this gets above 540 at some point, I don't really care about it. And it's got to be like 10 times the volume. But anyway, XBI also, look at this candle yesterday. This is not a great looking candle. Granted, it's still in this range. Granted, it's still above the 21-day. It still hasn't broken this trend off lows. But, whenever you have a good 2 days in the market like you've had on Thursday and Friday, and, you don't respond well, puts you on your toes. Even though there's like this divergent rotation and the XBI was stronger when other sectors were weaker, this candle could have gotten you out of the XBI. But, see what happens today. Maybe there's just an inside day. Sometimes you just get this green, red, green, green, red, 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 and it starts to just mess people up before a bigger move. So the XBI, which I've been in pretty much since these lows here, I'm not in right now. I'm still in some leftover ARK. ARK also, not really, not really getting any traction above this area, but at least it's not falling apart like it's done for the past year. So if you want to take this out and say, hey, you know what, I'm going to stay in ARK as long as this mini trend off the lows hold, yeah, it's kind of annoying me also. Like this is here. This is your little trend off the low. So as long as 42.31 holds, I think this ARK could have a little bit more traction to the upside. But again, yesterday it was sold into resistance, so this would be the spot. So I'm still there. IBM is down a bunch, which also is a little like you're like, okay, so yesterday I got caught short a little Qs on that bounce back, and then IBM wasn't great, and I added to it. Now the Qs are up. What's the Qs doing right now? The Qs are up like 250. Let's see what's going on here. Got to get more pissed. 280. Nice. So this is the Qs up 280. I'm being facetious, by the way. Anyway, so the Qs right here are up. Let's do that again. So this is what I would do if I were you. First of all, if you got out of your Qs yesterday, which some people are pissed off about, then just make sure you don't chase the open, because all of a sudden if it does retrace a little bit, then you're going to be feeling it again. So here's the Qs. So let's see where we are in the scheme of things. 292. So here's the Qs right now, 292.20. Okay, so it's almost above this halfway mark. Okay, so at this point you're having an inside day, and we'll see if, because this could definitely take this out and then all of a sudden start building in here. And at some point, especially if like Netflix is less than feared or better than feared, all of a sudden this 296 will be taken out, and you don't want to be caught in that, especially if you were trying to be long, just because of a candle that screwed you around. So anyway, Apple is up a bit even after yesterday's news. So if you got out of your Apple yesterday, made some sense after a move from the lows of 129 into this 150, 150 area. It made some sense to get out. And now Apple is what, up $1? Up 91 cents. So today I would watch Apple. Do sellers come back to Apple and take it from up 90 cents to lower? I'm not short Apple, but I know a lot of guys got stopped out of their swing, which makes sense. Why would you get stopped out of a swing? Well, you had a little red dog reversal sell, went above a prior high, couldn't hold it, took out a prior low. So right there that said, hey, look, after the size of this move you just saw in Apple, maybe you should reduce a little bit. And I believe that's what some Apple longs probably did. So if that was you, okay, that's fine. Let it rebuild here, and then maybe it goes sideways and then takes us out at some point. Maybe they don't care that they're not hiring as much. But if you went out short, I would say be careful to the fact that if they want to play games, I would say, what's this low here? This is 148.20. They start to take out 148.20. They might just say, hey, the fix is in. We want to, just get rid of all the guys that have short in the brain, and that's that. That could easily happen. I've seen misdirection start to happen in certain areas of a tape when you have both sides of the market thinking they're right. So at this point, if you have an opinion, just make sure the market doesn't confirm your opinion. That's all it is, and use a stop and just move on. I know for me, I'm not a great short. And a lot of people say, Red Dog, you should get short. Red Dog this, Red Dog, did you see Apple's candle this, that? So if for some reason, some things that you do aren't what you should be doing, don't do them. That made a lot of sense. But anyway, so here's Citigroup. Citigroup engulfed this entire area yesterday. A little sideways action. At this point, you could probably put this over here and say, as long as Citigroup holds this, the bank lows are probably in. I would say this candle just, look how cute this was. So Citigroup was on the monthly lows because of JP Morgan, and JP Morgan discontinued their buyback. Then Citigroup comes out better than feared and basically torches every short in them. So if you think that the shorts are having the easiest year, okay, they're also, the way the market's been trading, it hasn't been that easy. LI, yes, LI, look at that. LI is looking really strong. Look at that nice move above prior resistance, holding here, flagging. This LI definitely something trading much better. I remember these stocks were really hot a few years ago. If you want to look at NEO also, it's lagging a little bit, but I would think if LI and that group continues to act a little bit better, you obviously should be going with the leaders. But this NEO, why can't this get back to 24-ish? And while we're talking about that, we have Tesla coming out on what's it called? On Thursday. So here's Tesla. Tesla's just in this lower channel. It also has been a little bit of a choppy pain in the ass. Yesterday it was really strong, pushed up, and then right around 11:30 gave you a relative weakness divergence, and then dropped $20. So now let's take this out here. This is channel resistance. Okay, this 760 area. If this were to take out 760-ish after earnings, we'll see where it can go. Some people, then you have 792, but it would go higher than that. And then here's another spot. If they underwhelm or they miss, and the street wants to take it the other way, then it's got to get below the 648, 675. So I'm going to make this chart is a little noisy for now. Remember when we were looking at this closer up, bottom line was last week, remember this reclaimed 681 and 685. That got some people long. And then now, so into support you could have bought it, into resistance you could have sold. At some point, the range will change. But for now, it's intact, and it's chopping some guys up. And I would wait till after earnings to see what's happening. This is 751. So let's put 751 in here. Tesla's been like my #1 P&L in the last, I would say, the last 3 years. Who's been trading Tesla really well? Because Tesla's been awesome. Okay, just lately it's been different. Okay, this active sequence, I remember this one in March, made my first quarter. I made so much money during this because it was fast, it was furious, it was above the 8-day, there was momentum. And we even made some money short here when they sold the good numbers and it broke 973. But since then, it's just been in this lower range, trying to figure out what's next. Okay, and basically we'll see what's next probably on Thursday. It's your favorite trade. Tesla's great because you can see the relative weakness, you can see the relative strength when it trades through pivots. You know, there's a move there to make money, so you can make cash flow trading Tesla. And then obviously, if you got involved years ago, you could have gotten wealthy buying it as an investment. That's a difference. You got to know, are you investing or are you trading for cash flow actively? That's why I talked to you about my 7 accounts. I have 4 accounts that I trade for a living. An active account that I use just to day trade and take advantage of over emotion. I have a swing account that when we're above the 8 and 21 day in the S&P and the Qs, I try and be in 15 to 30 positions and ride it with a portfolio approach. I have a box account that takes all my positions, makes them bigger because I tend to be very consistent. I just, you know, could take more size so the computers do it for me. And then I have a what's it called? An options account. So I have 4 different accounts. So if I were you, I would separate them because sometimes if you separate them, it helps you distinguish your time frame. Okay, but then I have my long-term accounts. I have a 529 for Chase. It's 13. During the pandemic, I upped my monthly installments, which is what's good to do when you're down 20% off highs. And then I have a 401k that I do every single month, so I don't care. I'm 49. I don't care. Let the market do what it wants to do. Every month I get my average cost. And then I have that blood on the street account that everybody loves to talk about because everyone who has cash, they want to be put to work. They want to know what I'm doing. And I already told you guys what I'm doing a bunch of times. And if you look here on the weekly chart, I'm not doing anything else now. Okay, during the 2018 taper tantrum, I put in only 2 of the 4 tiers here. During the pandemic, I put in 2 of the 4 tiers here. And then what I do is, once I put them in, when we get these crazy corrective phases, usually when we make new highs, I piece them out. And that makes me alpha. So I started doing it again here, which I've been telling you guys as we've been going. And at this particular point, you still have this lower wedge on the weekly. Okay, if we start getting above this 3,900, you have 3,944, and then you have where we broke down from around 4,100. So I would say there's a small chance, that it could get back up to there. But you know, at this point, I'm going to only trade that tactically. I'm not going to put another tier to work because I think maybe it's going to be tough to make new lows for the rest of the summer. In an ETF that follows the 8 and 21 day, you want me to create one? There are people that do make what's it called, analytical sifters. Like TrendSpider's been talking to me. They actually put together a Red Dog reversal, analytics that will spit at you stocks that have been down for 3 days, break below a prior low, comes back above it. You could buy it there. So it's doing a lot of the work for you. And there are a lot of different types of things out there that, you know, identify bull flags and, you know, inverse head and shoulders patterns and things that are trading volume. For me, you know, I have so much going on that I'll miss a few things, which is fine for me, you know, but I'll do a lot of it manually. But anyway, back to this. So here we have this is what you call like a wedge. A wedge is what we call a pattern of indecision. Okay, and why would there be a pattern of indecision right here? Because we've already come in a decent amount off the highs, right? The S&P is probably about 21% off the highs or so, maybe less. The S&P went, the Qs went 30%. Kathy Wood's name went 70-80. So they're like, okay, from 41.81 down to 36.36. Okay, was that enough? Was that enough? Okay, some people are saying, yeah, I think that's enough because, you know, we just had peak inflation. Maybe the Fed needs to raise only 2 more times. So we've had peak hawkishness, and now, you know, earnings estimates are down enough. So 36 is enough. All right, so people are starting to get along here. Others are saying, oh, Red Dog, you're out of your mind. Housing, I'm not saying that that's enough. You know, housing just started to roll over. Okay, companies just started to lay off workers, and this isn't going to be the bottom of the earnings cycle, meaning that this quarter is not going to be the low. It could be 2 more quarters that, you know, after consolidating here, we're going to break 36.36 and see 35.11 or 33.85 or 32.09. So this is where your tug of war fight is, in that wedge. I remember one time I was on CNBC with Mark Haynes, God bless his soul, I guess you could say, who basically at one point during the 2007-8 financial crisis, I'm like, the market has a wedge. He's like, Red Dog. Actually, he wouldn't call me Red Dog. He's like, is this wedge going to give investors a wedgie? So he kind of made a laugh. But anyway, at this point, here's what you have to navigate. This high here is 39.44. Gets above 39.44 on the weekly, then maybe you have 4,073 and 41.76. If all of a sudden Netflix is bad, we roll over today. We break below 37.38, which you could draw this line right here. Okay, I'm just giving you a little bit more intermediate because people like, are the lows in? So it breaks below 37.38. Then you have a retest of the 36.36, and then these are the three levels below. Mike Wilson from Morgan Stanley, who's been bearish all year, says we're going to see 33.85. That's an opinion. He's been right so far. Maybe he should hedge himself. As far as other guys that I'm reading out there say, everyone says we have to retest that the low of the year is in, and we're going to start a new active sequence to the upside. Goldman Sachs and Wells Fargo. Goldman Sachs reported yesterday, if you remember, I did show you guys where I think Goldman Sachs can get to. Goldman Sachs went right to the downtrend line. I said, watch this 308 to 309. I went to 311. Okay, at this point, Goldman should be acting better. The report was pretty decent. So at this point, I would say, hey, let Goldman Sachs kind of hang out in here. And if you can go and digest above the prior low, chances are, now that you have this point of reference, maybe there's another move. So say, hey, this is how my language would be. I would say, some are long Goldman Sachs versus 298, right? If you want to be tight and have a point of reference, well, if Goldman Sachs is going to be any good, it should hold the top third of this range, go sideways, and then at some point, the banks want to get upside traction, which it's hard to buy banks higher, then it's going to have to get above that, so I would watch it. But I would say at this point, it feels like the low is in. Same thing with Citigroup. I don't think it builds a high-level flag, but it might, so you could say, hey, I'm long Citigroup versus 49-ish, and as long as it holds 49-ish, there's a chance it builds and consolidates. But remember, last time it failed, so you want to make sure it doesn't this time. So I'm not going to be overly trading the banks. Yesterday, some guys were buying a dip in the banks. For me, I feel like I'm still going to be looking at the FANG names. I'm going to be looking at the semis. We made really good money when Micron came out. That was a great indicator. That was right here. Okay, when Micron came out, and remember he came on CNBC and started talking positively, and Micron took it at 54. Well, that's what ignited this move in the semis. I was in AMD, we were in NVIDIA. So now, yesterday you had not a very bearish candle, but yesterday Micron went red first, which gave you clues that AMD and NVIDIA could follow later, and then they did roll over, and now they're up, so we'll have to see. Google, I'm short Google overnight, and I don't like to be short. Google split. This I think was the right trade, right? You made a lower high, it didn't even get up to the range resistance, and did a little red dog reversal, closed near the lows. You could say this was pretty much on trendline support, but until I think Netflix comes out and figures out what it wants to do, I have a feeling Google's going to have a hard time breaking this. But Google is something that if you're not short Google, you probably shouldn't be buying it. You probably should be fading the open, because like this could be that H. There's some people like, Red Dog, what's an H cell setup? Well, here's an H cell setup. This doesn't this look like an H? You have your pull, a little bit of a bounce back. Some people short into the bounce back, so you could short versus this, and then if it breaks the bottom of the H, you get downside follow through. That's a short setup. I am not great at short setups, but that is one that I use tactically when we're in a bearish environment. I also use the red dog reversal where, like right here, makes the low, comes back above it. Actually, that's not a great one, but anyway. So there's different types of tactics to use in a tape like this if you're not holding multiple positions, because you shouldn't be, because the market hasn't been rewarding you for that. Now there's small little clues that, hey, maybe the market's acting better, but it's just, well, it could be also throwing you off before another leg, which I showed you on the weekly. So at this point, I've had a little bit of I would say a little bit of a frustrating few days. I've been a little bit off with certain things. So for me, even a pro who's been doing this for 22 years, I got to figure out how to get back in a rhythm. You need to be in a rhythm with the market. I've been writing and talking a lot better than my execution. Why? Because I started shorting a little early yesterday, then I missed a rollover, and then I started buying a little early yesterday to play for something like this, and it was too early. So there's the fine line between the execution. So if you feel like that fine line is friggin' stabbing you a little bit, then take a little less size and give that fine line a little bit more room, or just really, really wait for compelling areas, or just sit back and take a deep breath. Either which way, We'll see how today works out. Does the early strength hold, or do sellers come in and let some of the shorts out, and all of a sudden, will the SPYs, kind of hold in here to then create an inside range to then perhaps take out this 389 at some point for another move. Are the plates 315 impressive? No, I did that in college. Actually, I did more than that. I actually used to do 225 when I weighed 205 pounds for like 15, and then I did 3 plates actually for 2 or 3. My max was 355, but I wasn't great with shoulder presses. We all have our strengths and weaknesses. Same way I'm a better long than a short. It is what it is. Good luck today, guys. I appreciate you. Thanks for tuning in.